Good evening, everyone. Thank you for joining us for our first opportunity launch in 2024. Wishing you a very happy new year. Today, we are going to be talking about our latest office opportunity launch in Pune in Viman Nagar. It's called Amar Tech Center, Pune Amar Tech Center office opportunity. This is an opportunity where you can invest in 53,000 square feet of office space located in a brand new building in Viman Nagar. The total asset size is about 77.8 crores. The tenant which we're talking about is a giant co-working flex space office operator in India. This opportunity comes with an entry yield of 9.1%. The effective yield is much higher because the first escalation kicks in right after 6 months, and we'll talk more about it in the further slides. We are targeting an IRR of 13.1% with a 5% capital appreciation year on year. This is a fresh lease and fresh lock-in of 5 years. And as I said, this opportunity or this property is based in Viman Nagar, which is very close to the airport in Pune. I have my colleague Kalyan, who heads acquisition and supply, with me, who will take on the presentation from here. And we also have our head of legal, Smruti, who will talk about the structure of this transaction and answer any other questions related to the structure. So I'll hand over this to Kalyan to take it ahead from here.
Thank you, Nihar. Good evening, everyone. Thank you for joining us this evening. To present to you this opportunity, I've decided to do a top-down approach. Let me brief you about what's happening in CRE in India, then about the city that we're targeting, which is Pune, then the building, then the business of the tenant that we have here. Let me take you back. 2019 was a year which in any commercial real estate, where was the first time that we shattered a figure of 57.7 million square feet in terms of office absorption, and then it was a record shattering for that. But then post-switch, what happened was COVID. We all know there was a slowdown in commercial real estate and office. However, at this right now, we're talking to 2023, almost in 2024 financial year, closure of 2023, and we are already at 61.6 million square feet of gross absorption, which translates close to 43 million square feet of net absorptions. This is a testament to the fact that India's commercial real estate is resilient, and hence, if I may dare to say, we are becoming slowly the capital of the world, the working capital of the world, or probably the office or the brain of the world. And hence you see banking and financial services, which are your back offices of all these large corporations, Morgan Stanley, JP Morgan, etc., at 23% of the total leasing share that you see here. We continue to be a very strong IT player, and hence we have 21% of technology ITS companies coming here. But then the most interesting thing that I would like to cover in this session with you is basically to tell you about this new sector which has come up in India, and it is growing in a very, very fast manner, which is your flex office space operators. This word is very generously used, and I will segregate it and make it easy for you, and I'll tell you what is the investment thesis in terms of the tenant out here. Engineering and manufacturing continues to be a dominant player in terms of leasing, which is at 15% right now. On my right, if you see this pie chart out here, it's pretty interesting to know that Pune is giving tough competition to metros like Mumbai, etc., Bangalore, etc., which are largest absorption cities at 3.5 million square feet in H1 already. So taking you from here, managed flex spaces. Let me first define it for you. This is a word a lot of people use, but I will break it down, make it very simple for you. There are three kind of managed co-working space, etc. The first is called serviced office space. Simply you go there. There's an office, you pay by an hour. There is a pantry where you can have coffee, you can have snacks, etc. Pay by an hour and go. The service is basic. There's nothing much to be done, and you can go have your meetings and go out there. So there is no lock-in whatsoever in a service space, and these are not. These are very small options for occupiers at all. I mean, this is only for individuals if they want to walk out of a place. Second is your co-working spaces. Now, co-working spaces will naturally have office take-ups of from 5 ranging to 50, but their lock-ins are very less. It's close to 1.5 years. And they do not take large spaces. They will probably take half a floor or a full floor, but not buildings. The biggest and the largest guys in this business are the managed office spaces or the enterprise leasing guys. This is where the biggest game is, and I will prove it in the point in terms of numbers. The fact that if you have a managed service office player as your tenant, it's almost like having a corporate as your tenant. Now, why do managed office players have done well? They primarily have done well because of the simple fact that the kind of customization services they afford. You'll be surprised to know that the greatest of the tenants in terms of grade, like tenants like Google, Microsoft, etc., do not have their real estate in many cities right now. They in fact have the entire facilities of their employees working out of these offices. That's primarily because of the kind of customization, etc., that they offer. So you have scalability, you can scale up, you do not invest and do this whole long run process of buying or leasing a real estate out, having a CRE team, etc. Their amenities are shared. So it's a community kind of a working space, which basically gives a lot of upliftment to your employees. Modern design, again, is something which is pretty evident in these kind of facilities. The entire thing is tech enabled. So you have apps in order to measure, you have your offices, meeting rooms, etc., available to you on apps. Accessibility is great. When you are an occupier yourself, you will have to, say, for example, offer a shuttle services for your employees. But here, the managed office space does that to you, and there is a lot of customization that is done as per you. And that is the reason why the managed office space operators, unlike co-working or shared services, have a WALE, which is the weighted average lease expiry, or the lock-in that we talk about in real estate, or on an average of 3 to 4 years. And their take-up is 100 to 500 seats. And that's the reason why, because of all this, they're able to attract grade A plus tenants in their facilities. Now let's look at India. I'm doing a top-down, so it's easier for us to understand. This concept started in 2016-17, is 19 is when it slowly took off to 15% of the overall absorption in terms of leasing. 20 was a bad year for COVID. I mean, so office as a sector did not do well, but then it slowly picked up. And we are close to 17% of the pan-India leasing is being taken up, which is grade A stock here. I'm not talking BC grade, pure grade A stock being taken up by managed office and enterprise leasing service providers. Very interesting to note that in this pie chart, you will see that the highest penetration of flex office is in Pune. It's close to 9% of the total India absorption by these guys. Now, having said this, we spoke about the country. Now, let me speak about Pune. Estimated CAGR of 20%, going from 5.4 to 8 million square feet at 2025 in these kind of markets is very exciting. So at the end of the day, the kind of take up that is happening is because of the inherent demand that the flex office or the managed office provider faces, which he is getting. So you will see that 4x multiplication in terms of 4x, the number of times of absorption be done by these guys since 2018 to 23 is phenomenal. And today we have close to 5.4 million square feet in Pune itself. The total absorption of all flex providers, I'm talking about this large managed office enterprise leasing providers, 13% in India. You'll be amazed to know that out of every 4 flex deals that happens in the country, 1 happens in Pune. That's close to 25%. So, right, we're talking about 2 million square feet already taken up by the managed service providers, and which accounts of the total leasing that happens, Pune, 35% is done by these guys. So I'll not be wrong if I say that they are actually the biggest players right now, because they are able to do certain things which are done in a very smart way, and hence they are a great asset or a great supplier or a vendor to the occupier who comes in. You must have read about this in the papers. There's a JLL report with SmartWatch which says that close to 100 million square feet will be taken over the next 5 years. You have India's flex space touching 80 million square feet 2026. So at what I'm trying to say here, although it's a new concept in 2016, but slowly it is becoming a great tenant to have, but provided it's a managed office space which take up larger offices, which by larger offices, I mean they take up the entire building, which I'll illustrate in our investment that we are proposing right now. Location, very simple. Pune has been a market which has been pretty dear to us. We have done all our research in Pune. We have met developers, we have met architects, we have met funds, and we have come to the conclusion that Pune is a market where it is a market which can give a lot of cap appreciation based on the kind of tenant pedigree it has, the kind of tenant stickiness it has. So tenants tend to stick in this place. That's primarily because of the fact that Pune is a very livable city. It's rated by many data points that you might find across the internet or read about it. It's a most livable city in the country, as they say. That's primarily because of the simple fact that there is a very large talent pool. There are very good institutions which churn out resources for these occupiers as employees. The cost of living is pretty low. The weather is great. All this makes Pune as a great market, and the numbers, as you can see on the screens, are pretty exciting as well. Now, to make it easy for people who are not from Pune, you should always divide entire city into three parameters, which will explain the concept of the investment itself. So I've divided Pune. We've divided Pune into three parts. The central business district, which is the old business district. This is where the city probably started when it became a business hub. So people from Bombay would know Nariman Point is CBD, which is central business district. Or say in Bangalore, somebody will know in and around MG Road, it's a CBD. But then as and when the city expands, the business expands, more and more occupiers come in, the city expands, and hence your secondary business districts or SBD gets formed. So our subject asset out here is in SBD East, which is a new asset or new area that we have explored. We have previously invested in a PVD, which is peripheral business district in Hinjawadi. SBD West is Baner Balewadi, which is very close to the Bombay-Pune highway. SBD East is Viman Nagar, which is again pretty close to most of ITES occupiers out there, and it itself is a large market for ITES tenants and occupiers. In terms of very important to know that in terms of location, what infrastructure makes a big difference to these markets, right? Our subject asset is right here. You can see it here. ATC, which is the Amar Tech Center, and your metro, Ramwadi metro station is right opposite, which is like 450 meters from here. It's around 3.1 kilometers from the airport. And metro being in front of the building solves a lot of problem for an occupier. That is the reason why an occupier will always look for improved infrastructure, like the metro being close to the because their commute of their employees becomes easy, and hence they beat the traffic, and basic things like attrition, etc., is controlled because there is commute is easy because of this metro. So we always try and pick assets which are close to major infra developments. Now, Viman Nagar is primary SBD. It is home to one of the largest in Pune, the best of the tenants. It is a very bustling social infrastructure. There are malls, there are hospitals, there are hotels, everything that there is. It's a very big residential catchment also, which is itself a play of the entire real estate as a community. So here, as you see, this is our subject asset, and right here, you can see will be the metro. Going forward, major tenants, again, as I told, most of them are there. So you have Bajaj Finserv, you have Mindtickle, you have Theresen Group, you have Siemens, Cummins, everybody's there. As you can see, it's a densely populated ITES area. And hence, the total vacancy of A-grade stock will be less than double digit. I mean, we're talking about single digit vacancy of grade A stock in Viman Nagar. So whenever we do a transaction, it's very important to understand the mathematics of real estate. By mathematics of real estate, I mean that I've established things which are qualitative in nature, which are few more right now. However, I would like to tell that we get our mathematics right, and hence we always say that we do intend to get into properties which are at market or below market warm shell rentals. So subject asset that we're getting, which we'll discuss in detail in terms of financials, we're getting it at 80 rupees per square feet, where in the market the current trend is from 80 to somewhere between 105. So yeah, we are right in that, picking up an asset which is under rented or probably at market rents, and hence we'll always get the capital appreciation. Secondly, we have been able to get this at a warm shell purchase price of close to 12,598, which is again little lesser than what the market commands over that place. So we will be making that capital appreciation and justifying the IRRs that we're talking about. Very important again to understand the asset and the tenant. Most important is the builder whom we are tying up with. We always try and do partnerships with the best builders of town. Our builders will not need any introduction from folks from Pune, but from folks who are not from Pune, it is a matter of pride to say that we are associated with a reputation of somebody like Amar Builders. They've been in Pune for the last 4 decades. They're into commercial, residential, healthcare, etc. 14 million square feet developed, and all of their properties are by far landmarks. I can talk about Amar Tech Park, Amar Business Zone. They're coming up with Amar Summit. All these are absolute landmarks, and that's the reason they have been able to get the highest rentals in those markets and able to attract tenants like Google, HSBC, etc. Right, as you can see. So, and this is the first time that retail investors are getting access to have investment in a reputed builder like Amar Builders. So this itself makes a investment thesis very good. Simple. It's a 14-story building. It's a ground floor, 2 parking levels, 12 habitable office floors plus terrace, 3.5 lakh square feet, out of which we are acquiring 53,210 square feet as a part of this investment, which is in Viman Nagar. There are 2 tenants in the building, IndiCube and SmartWorks. Our tenant is SmartWorks. I'll tell you a little more detail about SmartWorks so that there is a sense of comfort as I explained to you about what managed office spaces are and how they are different from co-working or service office spaces. This is a simple illustration of how the building is. 3rd and the 4th floor, which you're acquiring, you can see very efficient floors. Now, the great thing about being associated with a builder of a reputed Amar Builders is that you are very sure that the building is grade A plus. And when is a building grade A plus? Make it very simple. 3-4 things that you have to look into. The column span or the width of the pillars of the building will be more than 11 meters, which makes it very efficient. We'll also look at the floor to ceiling height at 4.5 meters, which is grade A, which occupiers look at and investors also look at. Third, you will have speed of 4.5 meter per second for these kind of lifts, which basically takes care of the entire traffic management. I've seen the building when it is in the peak traffic, which is when the office starts, during lunch and the end, it is very efficiently managed. And hence, this is what gives us an opportunity to make that kind of capital efficient because the building itself is grade A plus. Now, these are the actual images of the assets. So from your HVAC to VRV systems to your DG backup, everything is there in terms to make it grade A plus. SmartWorks is India's largest in terms of area. They have close to around 8 million square feet, 500 plus clients, 1.5 lakh plus workstation in 14 cities. Most important to note that out of this 8.8 million square feet in Pune, they have 2.2 million square feet. They're coming with 0.6 million more. And their average locking of their tenant is close to 3 to 4 years. And their vacancy levels is again close to single digit, about 6 to 8%, which makes it almost like a corporate tenant for us. And hence the confidence comes. Having said this, I will now request Nihar to take you through the terms and financials of the investment thesis. Over to you, Nihar.
Thank you, everyone. So, as I mentioned earlier, this is a fresh lease. Started in August 2023, 5-year lease and 5-year lock-in with an escalation of 5% year on year. The escalation is on the warm shell rent of 80 rupees per month. We are getting a security deposit equivalent to 3 months rent, and the insurance and property tax is to be borne by the SPV. Now, while we say that the year 1 rental is about 9.1, the effective is about 9.36 because 6 months into the investment, the first escalation kicks in, right? And we'll see that in the financial model as well. And hence, the effective yield every year is going to go up by this 25 to 30 bips, which we are showing over here. This is a breakup. The gross price is 74 crores, and the net purchase price comes to about 77.8. There is no stamp duty and registration since this is an acquisition of an LLP company, which is already there. I will quickly take you all through the financial model, which we will share, and it's already uploaded in the drive. So if you look at an investment of 25 lakh, which is the bare minimum, then you are hitting an average IRR of about, or average rental yield of about 9.7. I strongly believe that if we were to look at selling this eventually in span of 3 to 4 years time and looking at exiting at a cap rate of 7.75 to 7.8%, then we are talking about hitting an IRR of close to 14%. However, being Strata, we've been conservative and we've written the target IRR at 13%. When you scroll down, you will see what is the kind of rent which we are talking about on a month-on-month basis. And from October itself, there will be an escalation, which you will see over here. Right. So while we have assumed 13.1 as a target IRR, I personally believe that we should be crossing close to about 14% in terms of capital compression rate when we exit this in span of 3 to 4 years time. All in all, this makes a great investment study, great investment case rather, in terms of very premium location, a great entry yield, and at the same time very close to the major infrastructure pockets like your airport, closer to the metro, and all of that. And very important, the rentals which we are talking about, the warm shell rentals, are at a discount to the market rentals. So that has always been one of our features. When we acquire any property, we ensure that the capital rate also is important, but at the same time, what is the rent at which we are acquiring a property, and what is it that we are getting it at? So we are at market or premium or discount. So here we are at a decent discount to the market, which gives us more room for that capital appreciation. The terms for investors remain same. The minimum investment is 25 lakhs. Our management fee is 1% per annum on your initial investment amount, and the performance fee is 20% over a hurdle of 20%. For the first time, we are going to be acquiring an opportunity under an LLP structure. And my colleague and head of legal, Smriti, will explain you the details, and she will take it ahead from here.
Hi, I'm Smriti. I head legal at Strata, and I'll be just taking you through some of the important points that you need to be aware of about the LLP structure that we will be employing in this asset. So the LLP is a body corporate and a legal entity. It is separate from its partners. Each of the partners' liabilities in an LLP are always limited to the amount they put into the business. So that is why it's called a limited liability partnership. In terms of structure, all the investors that will be investing in this asset will come on to the entity as partners at the entity. There will be two designated partners. The designated partners are much like how your directors work in a company. They will be tasked with the day-to-day operations and other important tasks that need to be done day-to-day, and operational items of the entity itself, like filing. They have the power to sign like directors, etc. I will take you through the form of investment that will come in. As partners, you will be investing your funds into the LLP as capital contribution in the LLP. Like I said, the designation of the investors will be partners. The law that regulates the SPV in this case, which is an LLP, will be the Limited Liability Partnership Act 2008. Generally, our SPVs are private limited companies, which is under the Companies Act. The rental returns here will be in the form of interest on capital contribution. The measure of holding in the SPV, that is how much percentage a partner holds in the LLP, will be determined by the percentage of profit sharing ratio. The SPV charter documents will be the certificate of incorporation and the reconstitution deed. Apart from this, there will be some important filings which will also give the partners their details reflected in the Ministry of Corporate Affairs. These will be filings. There are certain forms. The important ones are Form 3 and Form 4. These two filings will give the list of who the partners of the LLP are and what is the change that has happened in a partnership firm or in the LLP. So every time there is a change or a reconstitution, you will be able to see that reflected on the Registrar of Companies portal, that is the MCA, through the Form 3 and Form 4. These are the investment documents that are important, along with the reconstitution deed, because the reconstitution deed is where all the details of who the partners are, what their profit sharing ratio is, what their rights and liabilities are, etc., will come about. In terms of taxation, there will be no TDS deduction for resident Indians when there is payout, monthly rentals payout in the LLP. The monthly rentals will be taxed as business income in the hands of the investors at their applicable tax rate. On the exits, there will be short-term capital gains or long-term capital gains paid by the LLP here. It is based on the period of holding of the investment in the LLP. About liquidity, there will be, when we talk about liquidity, it is the resales that are provided for your investments. There are certain forms to be filed when there is liquidity or when there is a change of partnership, right? When there's a change of partners. So in the LLP, it is not possible for us to file these forms as regularly as it would have been in a private limited company. since that is not possible, there will be only one liquidity event per annum. Of course, there is a lock-in of 1 year, as there always is, but all the resales will be restricted to 1 month in the year. This will be a predetermined month, and Strata will help you with all the resales around the year, but all transactions will be executed and they will fructify only in 1 month of the year. There is a stamp duty incidence on admission and retirement of partners, and this will be 1% of the investment amount or up to 15,000, which will be applicable every time there is admission retirement. It is not on each admission or retirement, it is every time that there is. So when we are doing the reconstitution of say 15 resales, or at the time of closure of this investment opportunity, there will be one incidence of stamp duty. So that is how that works. I'll be handing this back to Nihar so he can take you through some snapshots about Strata.
Great. Thank you, Shruti. So quickly, just a brief on what we've done till now. We've crossed 1,300 crores of AUM, which is totaling to about 3 million square feet, with a presence across Jaipur, Mumbai, Pune, Bangalore, Chennai, Hosur, and Hyderabad. We are one of the only fractional investment platforms which is very well diversified in terms of your asset portfolio. We have about industrial portfolio at about 45% of our overall investments. Office is at 30, warehousing is at about 24 to 25, and retail is just one asset which we did. Tenants in our portfolio are quite marquee. I mean, right from UBS to Randox to Havells, Henkel, Tablespace, SM Auto, Microplastics, you name them, across industries and across sectors, we have them. And all of them have been quite stable with us. Our leadership team has been, again, very solid and stable. All of us have been in the organization from almost at the start, while Sudarshan and Priyanka are the co-founders. We have Ankit, Kamal, Smriti, Devrat, and Kalyan heading our other departments, and Saloni is our Chief of Staff and Chief of Strategy. The good part about investing with companies like us is that asset management services which we provide are through the entire life cycle of the asset, which includes the due diligence which is done at the time of purchase or before acquiring an asset, and post that during the life cycle of the asset. Today, we can boast of having one of the largest teams on asset management side and leasing side, which is, I think, very important from a company standpoint and a risk standpoint. Apart from that, we also have our dedicated investment managers and a very strong customer support team, which takes care of any and every query which you as an investor might have on any of your investments. We give an access of an investor dashboard to you for you and your family and group to check on any details regarding your investment. If you want, our investment managers can actually take you through a demo of this, and we have certain videos also which you can go through, which will give you more details about this. So investor dashboard gives you details of all your investments, all your family investments, any TDS which is deducted if you want to go through that, any rent receipts or interest receipts which you want to go through, any other reports also which you want will be available on the investor dashboard. As a company, we were backed by, or we are rather backed by Elevation Capital, Mayfield, Gruhas, and Kotak. We have a backing from them since more or less the inception of our company, and Kotak and Gruhas came in about 2.5 years back. We work with reputed names in the industry in terms of a custodian. We have Universal Services, which we take, Universal Trustee Services. We have Vistra as our custodian, HDFC and ICICI are banking and escrow partners, and we do all our payments securely through Razorpay. There are quite a few coverage on the media in terms of the planning which Strata has in terms of raising 2,000 or reaching 2,000 crore AUM by the end of this year. And apart from that, the sectors which we are bullish on, whether it's office, warehousing, and the locations or the micro markets, which we are also bullish on. We've grown to 4, or rather we've expanded to 4 cities. We are in Bangalore, which is our HQ. Mumbai, we are in BKC. Pune, we are in Baner, and Gurgaon, we are in close to the Ambience Mall. So that's us.